Welcome. Thank you so much for spending the next 30 minutes with me. I understand I have a little bit of a tricky job being right in the middle of the conference. I know you get bombarded with information, so I try to be concise. I try to leave a few minutes in the end for questions. But yeah, again, I appreciate you being here. What do I want to cover in the next 30 or so minutes? First, I want to talk about what is offshore banking and why should Americans consider it. Secondly, I will be talking about international markets and why, as a US investor, you should consider diversifying into international markets. Thirdly, I want to talk about why Switzerland is such a popular and well-known hub for international investors and Americans particularly. And then lastly, I will briefly talk about WHVP, which is our company. It's a Swiss-based registered investment advisors. I am one of the co-owners together with my business partner. We took over the business from my father that you can see there on top. We have a wonderful team of employees in Zurich. Most of them are human. One is a dog, Henry, our positivity coordinator. And then, of course, being a Swiss girl, I love spending time in nature, be it either in the Swiss mountains or swimming in a lake. The photo up there is me on the Aletsch Glacier, which is one of the biggest glaciers in Europe. Now, what are we all about? I think this quote sums it up quite nicely because our main focus is capital preservation. Most people that we work together with, they are Americans just like yourself, and they have worked hard their whole life. They're at the end of their career, beginning of retirement, and they want to make sure that they can preserve what they have worked so hard for, either to enjoy their retirement years or to pass on to the next generation. And we find that while people oftentimes spend a lot of time thinking about making money, they don't often spend enough time thinking about how they can preserve it once they have stopped working. So one of the first reasons I want to cover why people are considering offshore banking, and when I say offshore banking, I mean banking in another country than where you reside in, is the US fiscal responsibility, or probably more irresponsibility, which we can see here. So that's the past 35 years. And we see it's pretty much a straight line up with a severe acceleration in the past 15 years. We do see the spike during the COVID years, but even before and after, everything is moving up at an accelerated speed. And that goes irrespective for which party is in power. And unfortunately, you see the graph ends there at 2022. It shows the national debt at 35 trillion. We are now in 2025. And there are 2 more trillions added. So if I updated the chart, it would even go above what we can see here. And what does that mean? I think it's not just important to talk about the amount of national debt that the US has. It's also important to notice who holds the debt. Because when we look there, 2014, slightly more than a decade ago, about a third or so, a little less than a third, was held by other governments. And now in 2024, a little bit more is held by other governments, but the proportion of debt held by private individuals has spiked. So the governments have become more cautious about the US and their level of debt, and they're like, maybe we don't want to accumulate more and more debt or not accumulate it at the same rate as the US is growing their debt, but the private individuals seem to be a little bit less concerned about that. And then, of course, what does that mean? If you have a level of debt that's entirely unsustainable, one way to get out of it is devaluing your currency. And this chart goes very far back. I'm not sure if you can see it in the back of the room. It's a very long room, but it goes back several hundred years. And we see it's more or less the inverse of the debt that we saw. It's a more or less straight line down. And if we look at the past few years, just that line, tiny little end is since 1995, so again, about the 30 years. And that might seem like it was more or less flat. But when we zoom into just those 30 years, and compare it to a safe currency, like for example, the Swiss franc, we see this. So this is the line down for just the past 20 years. And we could zoom in even more and just look at this year, and the US dollar has lost about 10% against the Swiss franc. Now, why am I telling you this? It's not to scare you or to be an alarmist, but it's just important to realize that we look at a time frame of several decades or several generations. The US valuation has only known one way, and that's a very important fact to keep in mind when you want to preserve your capital, and it's something that you might not realize when you look at your portfolio from month to month or from quarter to quarter, because the performance that you see there is not adjusted for the devaluation of your currency. And then this is one other composition just to go a little bit more into like who holds how much US dollar, what we see there the past 25 years. So on the left side in 2000, central banks around the world have held about 71% of their reserves in US dollars, and that has gone down to 58% a few years ago, and I would assume it's even lower now in 2025, because again, just as we've seen a few slides before, other governments are becoming more and more cautious of the stability of the US dollar, and they much prefer to have other currencies. What's also interesting to see is that the pound, the Japanese yen, and the euro holdings are more or less stable, but then the part that got more traction is like non-traditional currencies, and that's because countries like the BRICS countries, Brazil, Russia, India, China, and South Africa, they are moving away from the dollar because they don't want to rely on the US so much anymore. And now with everything that's going on this year, with the tariffs and the Liberation Day and everything that we have been seeing going on, it's more likely that other countries are turning away from the dollar more and more because they do not want to be too reliant on the US as a country. Now, the second point, besides currency diversification that you can get through an offshore bank account, is privacy protection. And again, my apologies, I think the snippets that I put together are probably a bit too small to see at the end of the room, but essentially it's just headlines after headlines after headlines talking about information of US citizens being breached. So we see medical data being breached, we see mobile phone data being breached, we see government employee data being breached, we see American Express being hacked. Like every single time I give this presentation, which is a few times a year, I quickly Google like data breaches in the US, and it doesn't matter when I hold the presentation, it doesn't matter where I hold it, there's always a ton of stories of breaches that have just happened weeks before. And I think that's something that's also very important to keep in mind. In the US, there's not really this culture of privacy. There's often also not really the systems in place for privacy. And the US is, of course, also has a huge target on its back because of its size, its wealth, the homogeneity of like the culture and the language that is being spoken here. So by just moving your data and information and money into another country, in a safe and stable country, we'll be talking about Switzerland more in a few minutes, that can already increase your privacy protection by a lot. Now, every time I speak about privacy, I find it very important to say this does not go towards the IRS. You will still have to report the account to the IRS. This is more privacy towards hackers, noisy family members, neighbors, just private individuals, information brokers that might have an interest in prying information out of you. And of course, with your financial information being less visible, this will also increase your level of asset protection because you will be less prone to be a victim of a frivolous lawsuit because people will know less that you would be an interesting target. Which brings me to this point. In the US, every year, 40 million lawsuits are filed. The US is the country with the highest number of lawsuits happening, and if you are exposed in a job like a doctor, entrepreneur, lawyer, anything else that might increase your level of being prone to lawsuits, those numbers will go up even higher. So by and of itself of holding a Swiss bank account, you will not be protected from lawsuits because a US court order will be upheld, but again, your information will be less visible, and you can also combine a Swiss bank account with an offshore asset protection structure, like, for example, a Cook Island Trust or a Nevis LLC. We don't offer them ourselves, but if that's something that is of interest to you, then I'm happy to make some connections to attorneys who set those structures up. And now moving on to like why international markets are interesting. So now we have spoken a little bit about the threats of like why keeping all of your information and money in the US can expose you to risks, but I also want to talk a little bit about opportunities. And what we can see here is a correlation of various different stock markets from Europe, the US, Canada, Japan, and the Asian Pacific area, excluding China. And what we can see is, in a sense, common sense, they are not perfectly correlated. So they are not moving in tandem. That means you are missing out on diversification by keeping everything in the US. So you will not be compensated for the risk that you're taking by keeping everything in the US. You can very easily lower the volatility of your overall wealth by just moving part of your money into a different stock market. This is what we see here. A study that was done on like how the volatility changes in a portfolio if you add non-US stocks. And what we see here, like there's no point in being 100% out of the US because then you just have the opposite problem. But if you're about 25 to 30% outside of the US, outside of your home market, then you have like the highest decrease in volatility. And that's like a low-hanging fruit that you can very easily access without it really costing you anything. Also, what we can see here is, again, like a comparison of how Europe performed against the US markets. Most of you are probably aware of that the US had a very good run the past 15 years or up until the beginning of this year and has outperformed the European markets. But during the financial crisis and also during the dot-com bubble, we saw European markets severely outperform the US market. So if you do believe that the valuations in the US might be a little bit lofty, if you do believe that things are a bit shaky here and that there might be a more severe market correction at some point in the future, then diversifying out of the US, at least partially, is going to protect you from that. And then one last slide in terms of opportunity. The European markets are much more interesting in terms of valuations compared to the US markets. So we see you can get the European markets right now at a discount that we have not seen in the past 25 years. So it's a lot cheaper to buy European stocks than US stocks because we do believe that the US stocks are overheated and overvalued right now. And in Europe, we do believe that there's a lot of potential and that we see in general a little bit of an undervaluation. Now, why Switzerland? I mean, you could do offshore banking in a variety of different countries. Of course, I am a little bit biased. I was born and raised in Zurich, and I love my country, but I do believe that there are a lot of objective factors that speak towards my home country for banking. First and foremost, there's no other country that has a track record as long as ours when it comes to the management of like private people's money. We started doing it during the Middle Ages. We have managed the money of like wealthy royal families in the 15th century and have been doing this ever since. Also, something that is unfortunately even more relevant now than it was a few years ago is we are a neutral country. We have not been involved in any armed conflict in over 200 years. We are also not part of the European Union. We are not part of NATO. We are really a small island of independence in the middle of Europe, and thankfully we were even able to avoid both world wars despite them happening all around us. I see the bullet points got a little bit mixed up, like the 240 should be on the line below, but what it says is we have over 240 banks operating out of Switzerland. Considering that we are only a country of 9 million people, this means we have the highest like bank to like population rate anywhere in the world. We also manage 25% of all cross-border wealth in the world. So any money that is being managed outside of the home country of the person like living in, a quarter of that is being managed in Switzerland, which again I think is quite a feat considering you can drive through our whole country in 4 hours. We have an exceptional education system. A lot of people start working in like corporate banks at the age of 15 or 16, where they work while getting their high school diploma. So you have a lot of young people who have extensive experience, who have a good understanding. We have virtually free universities. A lot of people are getting their university degrees while working a part-time or a full-time job. So we very much believe in education, but we also very much believe in on-site training. And then also because we don't really have any like natural resources that we could sell, we have to have like this very high level of integrity and professionalism. We pride ourselves on our culture of privacy, punctuality. We have to be good at the services that we provide because it's the basis of the wealth that we have. We, of course, also have very strict federal laws. For a company like ours, we are licensed in Switzerland, but also registered in the US. So you have like this safety and like confirmation that we are regulated by both countries. But even the banks and institutes that are only overseen in Switzerland, the thresholds are very, very high. And then I already mentioned it, we are quite a wealthy country. So we have a high GDP and we have very low levels of debt. So we have a debt break, which means we have to stay roughly below 40% debt to GDP. We are right now, I believe, at about 38%. The US is about 125%. The average in the European Union is about 80%. So we are really very fiscally responsible. And then, again, another bullet point that got mixed up, the Swiss franc as a safe haven currency. I've already spoken about that before. The Swiss franc is very popular during times of geopolitical unrest and crisis. It is a very popular currency, and right now, because it is so popular, the government, or respectively the Swiss National Bank, even had to lower the interest rate to 0% earlier this year. Now, our services, I already mentioned that we are a registered investment advisor, so we are not a bank ourselves. We work together with custodian banks in Switzerland or in Liechtenstein. Liechtenstein is a tiny neighboring country next to Switzerland. They make us feel like a big country. They have a population of 40,000 people, so we are huge compared to that. We help you get onboarded with the right bank. So we get to know you, get a feeling for what you're looking for, who you are, what your time horizon is, liquidity need, risk tolerances, any like preferences, restrictions, whatever, and we place you with the right bank. We then guide you through the account opening process, and once the account has been opened, we will help you with the international wire transfer to fund the account. Once the money has arrived in the bank account, you will have a meeting with your dedicated relationship manager who will propose a portfolio to you. Again, it's tailor-made and individualized. No two portfolios with us look exactly the same. You have, for most of our banks, you have an online access to the account, so you can see in real time what's happening. You get quarterly bank statements, and very important, you also get a yearly tax statement, so you can file the account with the IRS and pay your taxes on it. What is also very important to note, and I think a lot of people are not aware of it, it does not just have to be a personal account. You can hold it jointly with a spouse or family member or even a friend. You can set up an account for a trust. It can be a US trust, it can be an international trust, can set it up for an LLC or a foundation, or even move your self-directed IRAs overseas without it causing a taxable event. In terms of investing, you can do pretty much anything that you could do with a US brokerage account. For our firm, we focus on Swiss and international investments, so we typically exclude the US market and US dollar-denominated investments from our portfolio, not because we don't believe that they have value, but because we want to offer you this international diversification and access to that geographical region that we really know and understand best. If you have any particular reason why you want or need to stay invested in the US market, that's also possible to do. In general, we invest in foreign currencies, international stocks, international corporate bonds, and precious metals. I already mentioned my colleagues. We're currently a team of 5 people. A 6th person is starting later this year. We have on the left Daniel, our compliance officer. I mentioned that we are regulated by 2 countries, so there's quite a lot of complexity and paperwork involved in making sure that everything's above board. We have Jess, who maybe one of you have already met at previous conferences. He sometimes also does some public speaking. He's originally from Colorado, moved to Switzerland for love about a decade ago, and has been a valued colleague with us for about 5 years. Julia in the middle is also a relationship manager, just like Jess. She has been with the company for almost 25 years, so certainly one of our most loyal team members. And then my business partner and I, we both also have our own client base, and he's the head of the investment committee as well. I already spoke about the process of setting the bank account up. I don't want to spend too much more time talking about this. I would say on average for like a regular opening, it takes about 4 weeks. It's not necessary for you to travel to Switzerland. You're more than welcome to do so. We're happy to show you our offices and the bank or go to Liechtenstein together. But you can also do it from the comfort of your own home. So we can open up the bank account through correspondence. I think it's important to understand that there is a little bit more paperwork involved than if you were just walking down the street in your town and open up a bank account there. But this is our daily business, so we try to make it as easy as possible for you, that there is as little back and forth as possible. What else? We have fees and conditions. I also don't want to spend too much time on this. I think most important here to note is that the required minimum investment is 500,000. If the liquidity allows for it, we recommend to start with 800,000 or more because some of the banks charge a minimum fee. And if you're below the 800,000, then it's a little bit less cost efficient, but certainly possible to do. We work with an asset management fee, so we have an all-in fee that's a percentage on the assets under management, starts out at 1.5% and then goes down with the size of the portfolio. The banks also charge a custody fee that depends a little bit, again, on the portfolio size and the bank that you choose, but typically between 0.25 and 0.3% a year, and those fees are being deducted directly from the account, so there's not going to be any invoicing. The power of attorney is limited, so this is the only thing that we are allowed to deduct from the account. We cannot take anything beyond the agreed upon management fee. Now I think we have a few minutes for questions. Any questions for me?
Switzerland.
So there's very minuscule differences. So for example, Liechtenstein is part of the European Economic Area, which Switzerland is not. The bank in Liechtenstein offers the option to hold cryptocurrencies, which the banks in Switzerland do not. It's possible to move the IRA overseas with the bank in Switzerland, which is also something that only some Swiss banks allow for. So it's really small preferences. Liechtenstein also has the Swiss franc as a safe haven currency. They're regulated in a very similar fashion to us. We share a postal service, we share an army. So we are really quite close. There's no big difference. Whether or not Liechtenstein makes sense for you specifically, we can talk about in a personal conversation.
Thank you. Do you do U.S. tax reporting, 1099s, things like that? We
don't do any tax reporting ourselves, so we are not tax advisors. We're too small to do this properly. I think the U.S. tax code has like 60,000 pages. But we do have people that we work together with that we can point you to. So we always recommend you work with a CPA or a tax advisor that understands international bank accounts. Even if you had a good CPA for 50 years, if they have never dealt with international bank accounts, we recommend you start with working with a new person for that bank account at least. So we're happy to give out names, but we don't do it ourselves.
Does Switzerland have FDIC type of insurance for deposits?
Yes, it does. That's a good question. So we do have something very similar to FDIC. Up to 100,000 Swiss francs is insured, would be roughly, I would say, 115,000 US dollars. What's important to note is all the investments, so stocks, bonds, physical precious metals, they are in your own name off the balance sheet of the bank. So if the bank were to go under, and the Swiss banks are some of the safest in the world, none of the banks we worked together with in the past 35 years have ever come close to any sort of financial issues. But if they were, the investments are yours, and then the cash, 100,000, you get back, no questions asked. Everything above that would go into bankruptcy proceedings.
So if I understand you correctly, you need to send the money to a bank and then it goes into a portfolio. So the bank is charging you a fee and there is an asset management fee as well.
Yes, that's correct. So the money stays with the bank. We never custody the assets. We just have a limited power of attorney so we can invest the assets at the bank on your behalf within the strategy that we have determined.
So I take it that you all work with my management team here in the U.S. to make sure that everything's done tax efficiently?
Yeah, absolutely. How close we work with the U.S. team depends on your preference. We have some clients that want us to work very closely with the U.S. team. We have some clients that just want to keep it separately, because typically us just doing the international markets and them just doing the domestic markets, there's not a lot of like coordination required, but we can absolutely have conversations with them and make sure that everything's aligned, no problem.
Okay, next question is, and maybe you can explain this a little bit better. I take it in my portfolio here, we can do international also, but you can do much more international, or it's because it's done in Swiss francs that it makes it more safe?
So when you say that you can do it in the US, I assume you mean funds and ETFs.
Yes.
And those are, first of all, they're passive, and then secondly, they're still in US dollars and they're still in the US financial system. So we can do direct investments in whatever international stock market we like, and then buy the specific stock in the specific currency, and that will be outside of the US financial system.
But you all have things like ETFs also, or you do not?
We do have ETFs, but they're typically not accessible to US investors, which is why we stay clear of them. The few that are accessible to US investors, they are denominated in US dollars, and we try to get away from the US dollar, which is why we make like direct stock picking. If there's a particular fund or ETF you really want to have for any particular reason, if they're licensed for US investors, we can get them. Also no problem.
Okay, and again, maybe the last question is then you're saying you're picking individual stocks, individual companies.
Correct.
And I mean, it seems like all of that is just increasing costs. Is that true?
Well, I mean, we are not a low-cost service provider. What we do is very high quality. We have very high-level and skilled employees. So if you're looking for the most cost-efficient solution, we are not the best pick. If you're looking for the safest solution, then we are definitely a good pick. I think we can do one more question, and then I am slowly running out of time, and I want to give you some information where you can continue to do your research.
Hi, I think you captured this answer, but you're 100% actively managing the money.
Correct, yes.
Great.
Okay, so I have 2 minutes left, and I know it's a lot of information, so I want to give you some options like where you can get more information if you want to digest it or you want to repeat something. The best place for you to go is YouTube. You just put in WHVP, the company name, and you will find tons of videos, webinars, podcasts that you can watch for free that they dive into everything that I have covered in more detail. If you like what you see, we would really appreciate you also subscribing. It helps us getting the message out. And then, of course, I'll be at the booth only until tonight. I have to leave tomorrow early morning to go to another conference. So if you want to have a conversation with me, make sure to come by before 5:30. And we also have a silver coin raffle that you can participate in during the break. So I will be drawing a winner after this afternoon break. And you can also get a free copy of a book I've co-authored called Swiss Money Secrets. I ran out of physical copies, but you can put your name and email down, and I will send you a digital copy. Thank you so much for your attention.